All right, let's talk about that gap. You know the one. The huge gap between knowing all the trading theory and actually making your first trade. Today, we're going to build a bridge right over it. We're laying out a simple blueprint to take you from feeling overwhelmed to feeling confident. So, you've put in the time, right? You've watched a ton of videos, you've read the books, you know what a head and shoulders pattern is. But when it comes time to actually risk real money, you just freeze. You're not sure which indicator to use, which stock to pick. Sound familiar? Yep, that's called analysis paralysis, and it's totally normal.
But here's the hard truth. All that knowledge you've collected is basically worthless if you don't act on it. It's just trivia. So today, we're going to stop talking and start doing. We're building a precise, repeatable system to get you off the sidelines and into the game. Okay, first things first. To get you moving, we have to eliminate all the confusing choices. There are thousands of tools and strategies out there, which is overwhelming. But guess what? You only need one simple, effective setup to get started. Let's put it together right now.
Here it is, your entire toolkit. We're picking Zerodha Pi for software because it's free and has everything you need built right in. Simple. For the time frame, we're going with swing trading on daily charts. This is huge because it means you only need to check in after the market closes. Perfect if you have a day job. And most importantly, your universe of stocks is only the Nifty 50. These are the biggest, most stable companies in India. They're way less jumpy, and there are always people buying and selling, which makes it a much safer playground for a beginner.
And this slide really paints the picture of why we're choosing swing trading. Look at the difference. On one side, you have a calm 30-minute-a-day habit. On the other, you have the high-stress, glued-to-the-screen world of day trading. Our goal here is to build a consistent side income, not to burn out in a week.
All right, you've got your tools. Now you need a routine. This isn't about waking up and randomly looking for tips online. This is about having a professional process that you follow every single day, a ritual that becomes second nature. And the best part? It only takes about half an hour.
And this is it, your entire workday in 5 easy steps. After the market closes, you just open your charts. You quickly flip through the 50 stocks, just looking for anything interesting. If a few catch your eye, you run them through a simple checklist. If one passes the test, you're good to go. It's calm, it's structured, and it takes all the emotion and guesswork out of the equation.
Now, this is a really important mindset shift. Your goal is not to find a trade every single day. Your goal is to follow your process. Some days, maybe even most days, the best trade is no trade at all. And that's a win. Not losing money is your #1 job as a trader.
Okay, enough with the theory. Let's get to the fun part. We're going to take this exact system and walk through a real-life trade from start to finish so you can see exactly how it works.
So, picture this. We're doing our 30-minute scan, and boom, this pattern on the Infosys chart jumps out at us. It's a classic hammer. See that long tail at the bottom? That's a sign that the sellers tried to push the price down, but the buyers came rushing in and pushed it right back up. This is exactly the kind of signal we're looking for.
So now we run it through our checklist. Is the pattern clear? Yep, textbook hammer. Do we have a clear spot for our stop loss? For sure, right below that low, which keeps our risks small. Did the volume pick up? It sure did. Is the bigger trend on our side? Yes. Do other indicators agree? Yes, the RSI is oversold. We just got a check mark next to every single box. This is no longer a guess. It's a qualified, high-probability setup. And that brings us to the most important question of all. What's the risk-to-reward ratio? Well, our checklist tells us that for every 1 rupee we're risking on this trade, we stand to make 2 rupees and 66 paise. That right there is the mathematical edge that separates pros from amateurs.
And what was the result? A nice, clean 2.2% gain in just 3 days. This didn't happen by accident. It happened because we followed a disciplined process that found a setup where the odds were stacked in our favor before we ever clicked the buy button.
And that really gets to the heart of it all. You know, successful traders don't have a crystal ball. They're not trying to be right all the time. They just understand that trading, when done right, is simply a numbers game.
The core concept is called positive expectation. The easiest way to think about it is like a casino. The casino knows it won't win every single hand of blackjack, but it also knows that over thousands and thousands of hands, its small mathematical edge guarantees it will make a profit. With a system like this, we're the casino. We don't need to win every trade, as long as our wins are bigger than our losses.
And in the end, it all comes down to this one simple idea. You do not need to be a genius to make money in the market. You just need to be consistent. A simple plan that you actually follow day in and day out will always beat some complex, brilliant strategy that you only use once in a while.
So, there you have it. You have the starter pack, you have the daily routine, and now you understand the mindset that makes it all work. The paralysis is gone, the path forward is clear, the only question left is, what's your first move?